Markets closed higher here today as the S&P 500 and the Dow Jones Industrial Average hit all-time highs. A lot of the enthusiasm was around the $1 trillion infrastructure package, and a lot of the old line kind of steel and energy-related types of names did well in response to that. So we'll take a look at all of that, see what it means for our posture. Then we'll get into a trade application where I once again wanted to focus on one of those CRISPR gene editing stocks that looks like it's starting to perk up just a little bit here more recently for a bullish swing trade idea. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 10th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to the description area and make sure you're signed up for our email distribution list so that way you can be notified anytime we post these videos. You also have the benefit of finding the stocks in the S&P 500 that are giving you overbought and oversold cluster signals at the bottoms of those emails. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. That's a great way for you to stay kind of in tune with what David and I are teaching our classes throughout the day. We try to add value by posting our thoughts there on Twitter, so we would encourage you to follow us there. And then last but not least, feel free to join our group at the web address you see embedded in the logo in front of you there on Facebook. All right, let's go ahead and jump in today's trade activity. Let's go ahead and get a kind of a good feel for how the market shaped up today through the lens of individual stocks. This is a heat map here for the Market Scholars 1000, which is basically 1,000 stocks that are noteworthy and usually some of the larger companies, well-known ones that we can kind of get a sense as to where the movements were here today. A lot of these darker green colors showing up here today. One I wanted to focus on was Nucor. It's kind of in the lower right-hand corner here. Nucor is a dividend aristocrat company, meaning it's raised its dividends for more than 25 years in a row or more. Old line company, yet it was up 9.5% today. Absolutely massive move there on Nucor. Some of you saw me tweeting about that earlier today. Not only was it up a lot, but it broke through its prior resistance in doing so. So obviously a nice response there from that infrastructure package that I mentioned in the intro. So Nucor, keep it on your radar. It's breaking out to new highs. We also saw Cisco Foods. Now this is not Cisco System. This is Cisco Foods. That's another dividend aristocrat company like Nucor. It was up 6.5% today. Now that one isn't as obvious of a beneficiary of an infrastructure package. In that particular case, it was earnings that was pushing that one along. We also see Pfizer up here moving higher by about 5%. It's actually a stock that we recently selected for our top-down trend trading class that I teach on Mondays, and that stock has been off to the races as well. Pfizer has been up for basically 4 weeks in a row in a pretty aggressive percentage basis. And if you were to pull up an all-time chart on Pfizer, you might also be surprised to learn that Pfizer is breaking out to all-time highs here today after kind of stalling out near its 1999 levels for quite some time. So, it's not often we talk about a stock finally getting to an all-time high prior to the year 2000. But in the case of Pfizer, that is happening right here in front of us. And of course, they're benefiting from manufacturing those vaccines that are going out around the world. And, their vaccine compadre there in Moderna was actually down quite a bit today. It was down about 5%, but for those of you that have been watching Moderna in recent weeks and months have probably got your jaw dropped, because we are talking about one of the most epic growth stocks I've ever seen going basically straight higher. Moderna was actually a company that we looked at 2 times in a row back in March of 2020 during that same top-down trend trading class. So it was one of the few stocks that was holding up during the meltdown, and after the V-shaped recovery, it's gone up at an even more rapid pace. So it was kind of giving us a heads up during the meltdown for the rest of the market that it didn't want to do what everything else was doing. And now, a year and a half later, we understand why that was the case, as that stock has become an absolute legend. Moderna is actually larger than Amgen right now. And at one point earlier this morning, Moderna was larger than Merck. This is a company that most people had never heard of just 3 years ago. It is absolutely massive. You can see their market cap of $184 billion as it stands right now. Other big movers here today, I see Mercado Libre. That's a big Latin American e-commerce play. It was up about 7% here today. That's also been an epic growth stock over the last decade. And then one of the more recent growth stocks that may not have as much enthusiasm around it, yet if you look at the chart, you'd ask yourself why that might be the case, because the trade desk has been absolutely smashing it to the upside as well. They're up another 7% here today. They did a stock split here more recently, so their price is back down to $87 after being in the hundreds there for quite some time. But that is a stock that, despite the name, it has nothing to do with trading stocks. It is a company that benefits from a move towards online advertising. So those are some of your bigger movers here today, most of them to the upside, some of them benefiting from the infrastructure package. Others have kind of their own unique things going on. And then, as mentioned, Moderna and BioNTech, a couple of the red hot healthcare companies in recent weeks and months, are a couple of the ones that really suffered and given back a little bit of those gains here today, a little bit of profit taking going on there. All right, let's go ahead and get on over here to our traditional chart analysis now. And as you can see, I've got our 4-grid pulled up here. This is chart 4B for those of you that are premium members following along at home. And as you can see, I do have something new to report today, and that is in your lower right-hand corner. That's your Russell 2000 is now joining the party with the rest of those indices. Notice the dark green background color today as opposed to yesterday's light green background color. So we now have what's known as a strongly bullish posture on the Russell 2000, as that green line on the market forecast has now risen above the chart's midpoint. Notice that it's at 51 right now, obviously just a hair above 50 there, so that's why we've got that color change taking place. Now, having said that, I think we can probably look at these 4 different charts here, and at least from my perspective, Russell 2000 is the one that looks the weakest of the 4. So yes, it's true that they're trying to play a little bit of catch up here, and they've done a reasonably good job of kind of meandering higher, but I think as somebody who likes to look at the trends of charts, that's not a trend that I'm overly enthusiastic about at this moment in time, despite what that posture is telling us, in this case with a strongly bullish posture. The other 3 charts look much more interesting, and of course they've had a strongly bullish posture for several weeks at this point. As mentioned in the intro, the S&P 500 and the Dow Jones Industrial Average both had an all-time closing and intraday high here today. Closing price high was quite close there on the S&P 500. It managed to only beat it by less than a point. Nonetheless, it did happen. So it was a little bit more noteworthy there, I guess you would say, on the Dow Jones. Notice the Dow Jones was up 0.46% today, whereas the S&P 500 was only up 0.1% today. So the Dow was today's leader. And if you go back to kind of what I'd mentioned before about the infrastructure package, that should start making sense as to why that was the case. We also saw that the interest rate movement probably assisted a lot of those major banks within the Dow Jones Industrial Average as well. So I think all that kind of plays a role today, where this is more one of those days where it was more of an old line type of a day as opposed to kind of new technology oriented day. You'll notice that the NASDAQ actually closed lower today. It was a fairly ugly day there for the NASDAQ. It was down 0.49%, so 0.5%, not the end of the world, but in perspective of what happened with the other indices all being up, it was a little bit odd to see the NASDAQ turn tail there. And you'll notice that it wasn't able to quite get past its prior all-time high before turning around either. So we still are sitting with this high from August 5th, with that high tag above it there. The good news is the NASDAQ is still above that rising 30-day moving average there. You'll notice that that is the case with the NASDAQ, the S&P 500, and the Dow Jones. All of those moving averages are green, instructing us of that, whereas the Russell 2000 is still yellow there. So it's giving us a little bit of a conflicting signal in the Russell 2000. The other charts still look quite strong, despite what may seem like is a difficult market environment. We've actually been just coasting. It hasn't been difficult. Most of the portfolios that I I manage and monitor for our premium trading rooms are at all-time highs right now. And so, it's just kind of playing the odds, so to speak, with the trends in our favor. That's not always going to be the case. Eventually there will be a drop in the stock market, but we try not to overly anticipate that. Instead, we try to figure out where are we at right now and where are we likely to be in the near term. And then if things start changing on the charts, then we reevaluate. But it does us no good to be saying, well, the markets don't deserve to be up at these levels. Imagine all the people that have been saying that in the last couple of years, just on the outside looking in, how they must feel about their own portfolios. Meanwhile, people who have been looking for opportunities within the stock market are probably finding a bit more success with their portfolio's performance there. So, don't let the market play head games with you. Instead, use your eyes and ask yourself what you're actually seeing in front of you, despite what you might be thinking where a stock or a market should be according to your own analysis. So as it stands right now, we do have strongly bullish postures across the board according to the market forecast intermediate line, and 3 out of our 4 major U.S. equity indices do have upward trending 30-day moving average, helping us with the path of least resistance as well. All right, let's go ahead and take a look here at our 3 green arrows chart setup, and this will be chart 4D. And as you can see, we do have a couple of charts with 3 green arrows right now. The charts on the right-hand side. So notice the Dow Jones Industrial Average and actually the Russell 2000 are the 2 that have the green background colors there, meaning that we do have a 3 green arrow signal. Now, of the 2, I think the Dow Jones Industrial Average looks much more appetizing than the small cap Russell 2000. And the main reason behind that, from my perspective, is just what direction is the moving average going. Remember, the 3 green arrow signal can happen on charts that have downward trending 30-day moving averages, which is the case for the Russell 2000 right now. But it just typically means that you're going to have a lot more resistance to the upside as you try to break higher, because some of these people that felt like they bought the Russell 2000 wrong back here might be adding supply to the marketplace by trying to sell their shares at break even as that index continues to go up. Whereas the Dow Jones Industrial Average, the venerable Dow Jones Industrial Average, has been around for over a century. It is literally at all-time highs right now, right? Any person that's ever bought the Dow Jones Industrial Average in its existence over the last 100 years, if they've bought it and they are still holding it today, they are currently making money. So that means there are blue skies ahead. There are no old folks that bought the chart wrong or bought the index wrong that would like to now, in this new moment in time right now, liquidate at break even. Those don't exist. Anybody who's ever bought the Dow Jones Industrial Average before today is making money if they are still holding that today. That doesn't mean that they're making gobs of money, but it does mean that there's no natural overhead resistance the way that there might be there with the Russell 2000. So looks like we're in reasonably good shape there with 2 out of our 4 charts here with 3 green arrows, and of those 2, the Dow Jones is the one that looks like it has the more substantial trend in place here currently. Let's go ahead and take a look at our 1040 crossover method chart now. And as you can see here, we do have bullish crossovers across the board. Now remember, this particular chart 4C here does not have a lot of active switching of the posture because these are less sensitive approaches. Each one of these charts is 3 years in length. Each one of the candles is 1 whole week, and therefore anytime you see a transition take place, it oftentimes takes weeks or months for that to be fulfilled upon. So even when we've had some weakness, like with the Russell 2000 here recently, you've just seen the chart go sideways. We have not even seen a bearish reversal in the or a bearish crossover, I should say, in the 10-week versus the 40-week moving averages here. So it's not one of those things where you expect to see changes every single week when you look at it. It's more just an understanding that had you been bold and brave enough to trust the markets, trust the fact that prices were going higher, regardless of whether you believed they should be going higher or not. You have done reasonably well for yourself by being involved in the stock market for the last couple of years. So of these four charts, again, I'll just reiterate that it is the Russell 2000 that seems to be the one that's kind of stalling out here. The other charts look quite a bit better, but it doesn't mean that the Russell 2000 is going to be a stick in the mud. It just means that it's stalled out for now. It could easily kind of kick it into high gear here. It wouldn't be all that unheard of if it broke out to new all-time highs by the end of the year. Now keep in mind, August, September, October time periods do come with a little bit more nerves from the market's perspective. We've had a lot of market crashes throughout history occur during that time period, so it might be a little bit touch and go here in the short term. But once we get into November and December, those are usually months where the stock market starts kicking it into high gear as we hit new all-time highs going into the year end. So that could easily be in store for something like the Russell 2000. So don't count it out quite yet. All right, let me take an opportunity, pop on over here to the internet. I always like to get a chance to say thank you to those of you that help support the Market Outlook video. Remember, it takes David and I about 2 or 3 hours all in on putting the work together to do the video, do the research, look for the trade ideas, send out all the notifications, send out all the emails and all the stuff that goes into it. You guys only see a part of what goes into it, and we don't make any money doing this. So we try to give you guys a dose of education for free every day, and we ask you one thing in return: just help support us on social media by clicking like for us. So anytime I'm up and over 100 likes there on Twitter, I feel like it's worthwhile putting the effort in to do the videos for you guys. If we're below 100 likes, then I'm a little bit less enthusiastic about that. But you guys did a great job for me the last time around. 105 of you came out of the woodwork to help support this and say thank you for the effort. Please keep it up. We'd like to see more of these videos. Also, while we're over here, I wanted to point out we had a great kind of testimonial, I guess you would say, from one of our elite market scholars, clients here, Claire. She did a great job putting her portfolio together in my dividend classes over time, and she's got just an amazing track record with one of her portfolios nearly tripling the entire portfolio. So if you're curious about some of the stocks that we buy in those classes and kind of the mindset that we're looking for in the blue chip stocks that we like to kind of lock down for the long term, feel free to come on over here to my Twitter profile and check out Claire's portfolio there. And congratulations, Claire. That's an amazing job that you've done. Also, while we're over here, let's go ahead and take a quick peek at the sector selector. Remember, I put this together over the weekends, and so it's a couple of days old by now, but still gives us a general gist of what's happening here more recently. And week over week, we did have a couple of changes that were worth pointing out. Information technology replaced healthcare in that 2-3 slot. Now, healthcare itself is still looking pretty good from my perspective. It's just that technology perked up a little bit better on a comparative basis there week over week. And then this one was a little bit more surprising. So I wasn't necessarily surprised to see the technology healthcare switch, but I was a little bit more surprised to see financials making a pretty big move there from number 6 up to number 4 week over week. Now, part of that is what we'll talk about here in a little bit when we get back to the Thinkorswim charts. Interest rates have been clicking higher here for the last, let's call it week and a half or 2 weeks or so. And when interest rates go higher, that tends to benefit those banks and brokers and insurance companies and other financial companies. I've also noticed that a lot of the capital market stocks, your Goldman Sachs, your Morgan Stanleys, and then also some of your Moody's and your S&P Globals and your MSCIs, those types of companies have been doing pretty well here more recently. And I've also noticed a lot of the consumer finance companies like your lending clubs, and we had the news here recently about Square buying Afterpay and Apple teaming up with Affirm. So there's a lot of kind of movement within the consumer finance space that I think is adding a little bit of levity there to the financials as well. So be aware of those moves making their way into the top 4 of the sector selector, which is what we tend to focus on for individual trading opportunities in my Monday top-down trend trading class. Also, earlier today, I taught my dividend growth investing class. We focused on the healthcare sector. Found an interesting healthcare opportunity that pays a strong dividend. So if you're interested in that, if you're a premium or plus member, feel free to watch the recording there. And then David taught his directional options strategies class. It looks like it's pending right now, but I'm sure he'll get that posted here soon enough. So make sure you're checking that out if you're looking for some additional content from us here this evening. Tomorrow, I've got my factor-based swing trading class first thing in the morning, and then we've got options inventory trading with David at 2 p.m. Eastern Time. So some great stuff heading your way as always tomorrow here at Market Scholars. All right, let's go ahead and get back on over to our Thinkorswim platform, and let's do a little bit of 12 grid analysis, starting with chart 5A. And as this pulls up, a reminder that the background colors on this chart 5A will tell us whether we have a bullish or bearish intermediate posture using the market forecast technical indicator. And if you see the green backgrounds, those are bullish postures. If you see the red backgrounds, or pink backgrounds, I should say, those are your bearish postures. And so as we're looking at this, I guess we'll start with what I had hinted towards a moment ago, because this is somewhat noteworthy. Take a look in the lower right-hand corner here. The 10-year Treasury yield has really made a pretty lively move here in the last, let's call it 6-7 days or so. We are now up, let's see, 1, 2, 3, 4, 5, 6 days in a row. And that's been a pretty big move. Remember, you don't typically see massive movements within bonds or interest rates. So this has been a pretty aggressive move and consistent to the upside. It's probably, as I'm looking at it, this is the only 6-day win streak that yields have had in the last 3 months. So it is noteworthy. And also noteworthy from my perspective is the fact that we got up and through that moving average there. A lot of times you find securities failing around their downtrending moving average, but in this case, we went from an extreme low and crossed right up and through that moving average without thinking twice about it. Now, likewise, remember that the opposite impact of that is what happens to bond prices themselves. And as you can see with TLT over here on the left-hand side, long-term U.S. Treasuries, we've slipped the last 5 days or so, and we are now trading below the rising 30-day moving average. So I'll be very curious to see how that kind of plays out. You'll notice with the TLT, we actually have a bit of a lower high right here from July 20th and then again on August 4th. This high was slightly higher than this follow-up high right here, whereas down below here on the TNX, you had basically a double bottom that happened on those exact days as well. So trends had been that bond prices were up, interest rates were down, but over the last 5 or 6 days or so, that's being called into question. And that is what has assisted the financial stocks in comparison to something like REITs. Now, REITs are still doing fine, but they're not doing as well over the last 5 or 6 days on a comparative basis compared to what they had been doing prior to that. Remember, REITs like this behavior where interest rates fall. So for the last 5 or 6 days, as interest rates have been rising, REITs have not been outperforming at nearly the same level. So just be aware of that kind of intermarket analysis as you're constructing your own portfolio. I'd also like to point out that Bitcoin continues to work. I've mentioned this one several times in the last couple of weeks, saying that this is an interesting point to be getting bullish on Bitcoin. It's just that it's difficult for me to show you that here in the paper money setting because there's just not a whole lot of products that are around Bitcoin. I did mention GBTC, which is a Bitcoin trust that's a little bit more easier to trade in paper money, but otherwise there's a lot of ETFs that have filed applications to kind of formalize the first Bitcoin ETF. It's just that the regulators have not allowed it here in the United States yet. So we're kind of waiting on that. At that point, it'll be a little bit easier to trade. There are some stocks that are loosely associated with Bitcoin. In fact, Coinbase did their earnings report after the bell here tonight. They were trading a little bit lower the last I checked. There's also companies like MicroStrategy, Riot Blockchain, MARA. There's a handful of kind of Bitcoin-oriented stocks, but they oftentimes come with a little bit less liquidity. They're smaller players, and they're just a little bit sketchier compared to some of your blue chip companies out there. But for those of you that are willing to kind of dive into the deep end of the pool with those cryptocurrencies, I do like the behavior of Bitcoin Bitcoin here over the last 2 or 3 weeks, it looks like it does indeed want to bounce from these levels. In terms of some of the other intermarket analysis here, be aware that the US dollar has been up for about 5 or 6 days in a row as well. The UP finished up at 25 here today and is close to its 3-month highs. Now, typically when you have that type of behavior, you find a little bit of stress in commodities that are priced in US dollars, and that is what we've been seeing here more recently with gold and oil. Now, today, oil was actually up quite nicely because the positive impact from the infrastructure bill outweighed the negative impact of a rising dollar. But in general, you can see the background colors of gold and oil are both dark pink at this point, telling us that we have strongly bearish postures on those. With gold, that doesn't bother me at all. We still have that bear call spread on gold for this presentation. I think it expires next week, if I'm not mistaken. I think that was an August contract. So we'll have about 1 more week to be in that trade, and then we'll kind of reevaluate where our gold position or our thought process is around gold in the months to come. Because I always like to trade GLD. It's a nice liquid product and usually gives you a little bit of movement as well compared to a lot of other ETFs that are out there that can be a little bit more boring, I guess you would say, or less volatile. So gold is kind of a good trading product when it gets moving. Right now, the movement continues to be to the downside. You also have a little bit of a change here that is noteworthy, where the moving average itself is red. A week or two ago, I was saying how this is an interesting time where gold is appearing like it wants to stay above that rising 30-day moving average. Notice that moving average was green. Well, you can see where we stand a week later. It didn't hold it at all. In fact, it's breaking down violently and is breaking down below that prior support area. So that prior trend, what encouraged us to take the bear call spread to begin with, is now back in play. We are plumbing new lows there on a multi-month basis there on gold. You can also see high yield bonds have been struggling here more recently, kind of falling in line with what we've been seeing out of oil prices as well. And then foreign emerging stocks look entirely different from foreign developed stocks, and that's your China effect there, right? I've been tweeting a little bit about the China-U.S. relationship here today on Twitter a bit, and you're seeing that play through in the charts themselves. A lot of those Chinese companies are having a hard time catching a bid right now because the market doesn't know if they can trust them. As there's been a lot of kind of regulatory changes over in that part of the world here more recently, and China is the most important country within EEM, so it kind of feels like the other emerging markets are being unfairly punished within EEM as a result of the really negative activity from China specifically. If you look at EFA over here, it looks quite a bit better. That tracks your developed foreign stocks, your kind of European ones, your Australian, your Japanese ones. But even that does not look as good as what we are dealing with here in the United States. There's your chart of the S&P 500, and it looks really good. So keep your eye on that. Let's go ahead and do a little bit of 12 grid analysis from an equal weighted perspective now on the sectors. Remember, this is our new chart that was just put together on August 1st. This is chart 1G, and this will do the automatic background colors based upon the ranking system I use on the sector selector that we reviewed here a moment ago when we were looking at the internet. What this will do is it'll show you which sectors are currently ranked the strongest under that relative strength ranking system that I used for my top-down trend trading class on Monday. And so no surprise that the corners continue to be strong, right? We've been talking about that for quite some time in this market outlook presentation. And so to see them continuing to be strong is not a surprise. Now, I do want to point out what I'd mentioned before, which is real estate did suffer today. Right? Real estate was the worst performer today. It was down over 1%. And again, that kind of comes back to what I'd mentioned before, the interest rate sensitive aspect of that. Remember, REITs are kind of used as a bond proxy in some cases because they do offer higher than average dividend yields. Also, REITs require a lot of heavy borrowing and are heavily indebted. And so if interest rates go up, interest coverage charges and things like that are also going to kind of eat into that REIT's potential to pay out higher dividends in the future. So all that kind of ties together, and when you have big up moves in interest rate environment, you start to see a little bit of wear and tear on the REITs, and that is what we are seeing here today, down over 1%. It was actually its second straight down day. Meanwhile, look at the financials up here. Financials don't look as strong as our corners there, but they do have that green background color telling us what we're in the top 4 there. We are a hair below that prior resistance area there, but take a look at that move out of the financials in the last 5 or 6 days. I mean, we're talking about day after day after day to the upside. So it's kind of tracking interest rates higher there because, again, remember, the banks do benefit when interest rates rise. So that's kind of a sneaky play there that I don't think a lot of people are talking about right now, but there could be that possibility of, switching out of some of your real estate stocks and moving that into financials if we do see interest rates continuing to make their moves higher. Also should point out while we're here, materials and industrials really benefited here today, along with energy. All of them were up around 1 or 2% on an equal weighted basis, and that is as a direct result of what we heard there out of the infrastructure bill. There's a high expectation that those particular sectors would benefit under that infrastructure package. All right, so let's get into our trade application example here for the day. And wanted to remind you that healthcare is our chart in the lower left-hand corner here. And you can see that healthcare has been in a really solid trend for quite some time. Now, as I mentioned in the intro, I wanted to focus on yet another gene editing CRISPR stock. You guys have been hearing me talk a lot about those here lately, whether it's been in these videos or whether you follow me on Twitter. It's an area that I'm awfully excited about. And as we go through to see where some of those stocks are here currently, you can see here's Beam. It was down today off of its earnings announcement, but it remains above its 30-day moving average. Another stock that has just been lighting the world on fire is Caribou Biosciences. Now this one is so new, it doesn't have a 30-day moving average yet, but you can see the stock is up like about 60% in a week. It has absolutely erupted higher there in the CRISPR space. Speaking of CRISPR, here's CRISPR Therapeutics. They were the ones fortunate enough to actually put the name of the technology into the name of their company. So a lot of times people will think of this company when you hear me say CRISPR stocks. I'm not referring specifically to this one, but this is one of the CRISPR stocks. And it, like Beam, is above its moving average in this case. We also have Editas, which of course is near and dear to our heart in this presentation. Remember, Editas, I got into that bullish trade in this presentation on this candle back here on June 15th when it had that momentary rolling over. Now, I had no idea it was going to erupt in the way that it did higher here, but it's really been benefiting ever since announcing its earnings here last week. So Editas has been one of the stronger CRISPR stocks that's out there. Another one is Intellia. This is the one that had the really positive in vivo CRISPR news back here in late June, and the stock was up like 40 or 50% in a single day. And it's done a good job of kind of consolidating those gains and then bouncing up and off of its moving average. So sold off the last couple of days, but remains relatively strong. And then Verve is another CRISPR stock here that's somewhat new. Unlike Caribou, this one did its IPO a little bit further back here in June 17th. So you start to see a little bit of 30-day moving average starting to develop here all of a sudden. You can see that stock is clearly above it, and it's close to its all-time high up here, close to 73 right now. So those are 6 of the CRISPR stocks you guys have been hearing me talk about lately. But one that you haven't necessarily been hearing me talk about quite as much is Graph, or Graphite Bio. And that ticker symbol is GRPH. Now, like Verve and like Caribou, this is another recent IPO in the CRISPR space. There's a lot of enthusiasm around it right now, so a lot of companies are coming public in that space. You can see that back here on June 25th is when they did their IPO, and that stock absolutely launched for the first 3 or 4 days after that first public offering there. The stock was trading around $20 that first day. It went all the way up to $34 within just a couple of days. Now, ever since topping out there, it's spent a long time making its way lower and lower and lower. I've had it on my radar, just kind of looking at it from the side, waiting for an opportunity to maybe have a discussion about it. And I thought maybe today could be that day we have that discussion, because I like the price activity that we saw out of Graphite Bio here today. You'll notice it was up 8%. Now, keep in mind, I sent out the trade application on this. We bought some shares of this stock with about 13 minutes before the market closed. And let's see, you can see down below here, yeah, it was about 13 minutes before the market closed my time out here out in the Mountain Time Zone. And we're already up about 2.5% on it. So when we were first looking at it, it was only up about 5%, and it's tacked on another 2.5 or 3% in just the last 13 minutes of the day. So just a friendly reminder to those of you that are wondering about the various features that we offer our premium members at Market Scholars. All of those folks learned of this trade idea 13 minutes before the market closed, so that way they could consider taking this swing trade idea. Now, 2.5% to the upside probably doesn't sound like a lot in just 13 minutes, but remember, in a swing trading environment, that can make or break your trade. Remember, everybody else who's not a premium member of Market Scholars would have to wait until the night to evaluate the exact same trade, and then they're already behind the gun by 2.5% in this case. So if you're not aware, remember, you can come on over to our website, marketscholars.com, and just click on our pricing tab up here at the top. And if you're looking for those real-time trade alerts as part of your subscription, then you're going to want to look at our premium subscription package. All right, anyway, let me get back over here to the chart and show you why this one was of interest to me. So you'll notice that it started basing here more recently, in the last week or two. We've also had some positive vibrations from the whole Moderna thing. I'd mentioned that before, but just to put that into perspective, what Moderna's chart looks like, this is 3 months, ladies and gentlemen. This stock is up 188% in 3 months, and we're talking about a $184 billion company here. So, about a week or so ago, Moderna had kind of made an offhand comment that they would be interested in buying companies within the gene editing space. And I think that really benefited a number of those CRISPR stocks that I had mentioned before. Well, graphite, for its part, just stopped going down. Remember, it was in a pretty nasty downtrend right there for a while, but the last 5 or 6 days or so, it really just started to go sideways. Today, we finally started to see some signs of life, where near the end of the day, we started crossing up and through the high on that candle there on the 6th, and we also got through the highs of some of these candles over here. You can also see that the background color of the chart is telling us whether we have a bullish or bearish posture using the near-term line on the market forecast. Now, you can't actually see the lines on the market forecast, just a quirk of the Think script because this is such a new stock, but this is an accurate reading of the near-term line itself, so we know that when it's at 62 and rising like it is here, we would consider that to be strongly bullish from that near-term perspective here. So that was kind of the impetus to take the trade. You can also see that we had an above-average volume day here today as well, where we did close near the highs of the session. So this was a bullish swing trade that I took, and we are basically putting our stop loss a little bit below the low of that opening day here on their IPO release date, and then we are shooting for a 1-for-1 reward-risk relationship where we try to lock in profits up here closer to 25. So that's what I had for you here today. Yet another CRISPR gene editing stock. If you enjoyed the conversation, if you got some value out of the analysis here today, I ask one and only one thing out of you. Just click like for us there on Twitter. That'll help ensure that we can get these videos done as often as possible going forward. I'll look forward to seeing many of our premium members tomorrow morning in my factor-based swing trading class. For the rest of you, hopefully I'll see you on Thursday. So with that, best of success with your trades and your investments. Goodbye for now.